Can I ask you about the first Fed meeting then for the year today, as what we have in the backdrop more evident that the US economy has been losing steam, but then hope still around this rebound later this year as a vaccine should take effect. What sort of line do you expect Jay Powell to talk about or to strike when it comes to this economic story for 2021?
So there's a heavy consensus that the message won't change this meeting. After all, the last meeting, they updated their forward guidance on asset purchases. There won't be any talk around tapering until we've seen that substantial progress. As I've just outlined, that's unlikely to appear until the summer at the earliest. I think later on in the year, then it becomes quite interesting if the economy does reopen and we see what potentially could be an extremely rapid rebound supported by huge amounts of cash on deposit from the household sector. The Fed may have to start to rethink its guidance later in the year.
Just on the point around tapering, it's quite extraordinary as we talk about many of the challenges that lie ahead and what we're seeing economically, that some investors are very much focused on whether tapering signals start to happen this year. Give us a sense of what the Fed would need to see and for how many months to be confident that they could start talking about withdrawing stimulus.
So obviously, this is the two objectives here. So a pickup in inflation, I think that's coming in the spring just through base effects. But more importantly, the labour market. So we need to see several million new jobs created between now and then before they would like to consider the tapering approach. And with the unemployment rate coming down, probably towards the 5% area, that would be, on their measure, substantial progress and to begin the discussion around tapering.
Tim, as we look at the moves that we're seeing around the fixed income market, 5-year TIPS yields fell. We're now at the lowest on this TIPS yield since April 2014. What does that imply in terms of the market's view on inflationary pressure?
So real yields are extraordinarily low, but this is something that the Fed would welcome. It's helping create easy financial conditions. But we have seen that the break-even rates start to move higher over the last few months, and that's also a welcome development. So one of the key objectives from the Fed is to raise inflation expectations. They've been running below levels consistent with meeting their target in the medium to longer term. So if you read carefully their statement, this is something they're looking at extremely carefully. Not only do they want to see actual inflation up at 2%, but also they want to see the anchoring of inflation expectations around that 2% figure as well.